plumber versus day trader versus real estate investor. 3 men, 3 different paths, one goal, wealth. Today we're going to simulate the next 20 years of their lives to find out who builds the most wealth. One becomes a plumber, one becomes a day trader, one becomes a real estate investor. All 3 start at exactly the same place. 18 years old, $10,000 in savings, no debt, no family money, no unfair advantages. Everything that happens from this point forward will be the result of their decisions. Most people already think they know who wins, but the final results may surprise you. Let's begin. Meet Jake. Jake chooses plumbing. While many of his friends head to college, Jake enters a plumbing apprenticeship. The work is tough, the hours are long, and the conditions aren't glamorous. But there's one thing Jake likes. He's getting paid while learning. No student loans, no tuition, no debt, just skills and experience. Meet Ryan. Ryan chooses day trading. He dreams of financial freedom. No boss, no commute, no physical labor, just charts, markets, and opportunity. Ryan believes that if he can master the markets, he can build wealth faster than anyone else. But the market has a way of humbling people, and Ryan is about to learn that lesson. Finally, meet Michael. Michael chooses real estate. His goal isn't fast money. His goal is ownership. He wants assets, cash flow, and long-term wealth. Michael knows the beginning will be slow, but he's willing to be patient. The simulation begins. Year 1. Jake starts his apprenticeship. His income isn't impressive, around $32,000 per year. But every day he's learning valuable skills, skills that employers desperately need. By the end of the first year, Jake has already saved more money than many college students. Meanwhile, Ryan opens his first trading account. The first few weeks feel incredible. He catches several winning trades, his account grows, his confidence grows even faster. He starts imagining an early retirement. But then reality arrives. A few losing trades turn into more losing trades. Small mistakes become expensive lessons. Ryan discovers that trading is much harder than it looks online. At the same time, Michael is quietly saving money. He rents a small apartment, avoids lifestyle inflation, and puts away as much cash as possible. While other people spend money, Michael is preparing for his first investment. By year 3, the results are beginning to take shape. Jake has increased his income. His skills are improving rapidly. His net worth has climbed to roughly $25,000. Ryan has experienced a roller coaster. Wins, losses, frustration, hope, and more losses. His net worth has fallen to around $6,000. Michael has accumulated savings through discipline and consistency. His net worth has reached approximately $40,000. After 3 years, Michael is in first place. Jake is close behind and Ryan is struggling to keep up. Most people would be discouraged, but the simulation is far from over. In second place, Michael, the real estate investor. Through patience, leverage, and asset ownership, Michael builds a portfolio worth approximately $2.1 million. An incredible result, but there is one competitor left. The winner of this simulation is Jake the plumber. Final net worth, approximately $2.4 million. Jake didn't win because plumbing is magical. He won because he transformed a skill into a scalable business. That's the lesson most people miss. The real secret wasn't the career, it was leverage. Ryan leveraged skill, Michael leveraged assets, Jake leveraged people and systems. Each path worked, each path created wealth. But the path that scaled the best ultimately produced the largest outcome. And that's the biggest takeaway from this simulation. Getting rich isn't usually about finding the perfect job. It's about building something that can grow beyond your own time, because time is limited, but systems can scale. So now the question is yours. If you were 18 years old with $10,000, which path would you choose? The plumber, the trader, or the real estate investor? Let me know in the comments, and if you'd like to see another simulation, subscribe for the next challenge. College student versus trade worker versus business owner, who retires richest? We'll find out next time. Years 15 through 20, this is where compounding takes over. Jake's plumbing company explodes in size. More crews, more trucks, more contracts, more systems. He spends less time working in the field and more time running the business. Customers keep calling. Revenue keeps growing. The company develops value beyond Jake's personal labor. For the first time, Jake owns an asset that could potentially be sold, and that changes everything. Michael also benefits from compounding. His properties continue generating income. Loan balances shrink. Property values rise. His portfolio has become a machine. The wealth grows steadily year after year. No dramatic headlines, no overnight success. Just consistent accumulation. Ryan finally becomes the trader he always wanted to be. Disciplined, patient, professional. The emotional mistakes that once haunted him have largely disappeared. His account continues growing. But there's one challenge. Trading income generally depends on capital. Unlike Jake's business or Michael's properties, scaling remains difficult. Ryan is successful, but his wealth grows at a slower pace than the other two competitors. 20 years have now passed. The simulation is complete. It's time to reveal the final results. In third place, Ryan the trader. After 2 decades of dedication, setbacks, and persistence, Ryan finishes with approximately $850,000. A remarkable achievement, but not enough to win. Years 9 through 14. Jake decides to stop thinking like a worker and start thinking like an owner. He hires his first employee, then another, then another. Soon he isn't just fixing plumbing problems, he's building systems, managing crews, and creating a business. His trucks begin appearing throughout the city. His reputation grows. His revenue increases dramatically. By the end of this period, Jake's net worth approaches $700,000. Ryan experiences a breakthrough. For the first time, he achieves consistency. His account grows steadily. His confidence returns. Then the market changes. A difficult environment wipes out months of progress. The drawdown hurts, emotionally and financially. Many traders quit during moments like this. Ryan considers it, but ultimately decides to continue. The recovery is slow, but he survives. His net worth reaches approximately $350,000. Michael continues acquiring properties. His portfolio expands. Rental income increases, property values appreciate, equity builds, and everything seems perfect. But real estate isn't easy. Tenants leave, repairs appear unexpectedly, vacancies reduce cash flow. Still, Michael remains focused, and over time his portfolio keeps growing. His net worth climbs to approximately $800,000. At age 32, the race is closer than ever. Michael remains in first place. Jake is gaining ground rapidly. Ryan continues fighting from behind, and now the final stage begins. Years 4 through 8 change everything. Jake becomes a licensed plumber. His income jumps significantly. Customers trust him. Employers value him. Opportunities start appearing everywhere. Soon, Jake realizes something important. There are only so many hours he can personally work. If he wants to build real wealth, he needs leverage. So Jake begins taking side jobs, then larger projects, then more customers. The seeds of a business are planted. Ryan refuses to quit. After years of mistakes, he starts studying more seriously. He tracks his trades, reviews his decisions, and slowly develops discipline. His results improve. Not dramatically, but enough to survive. Some months are fantastic. Other months are painful. The emotional swings are exhausting. But Ryan continues pushing forward. Meanwhile, Michael finally reaches a major milestone. He buys his first rental property. The process is stressful. Paperwork, inspections, repairs, unexpected costs. But when the deal closes, something changes. For the first time, an asset begins generating income for him, month after month. The cash flow isn't huge, but it's real, and that's what matters. Soon Michael buys a second property, then a third. The power of leverage begins working in his favor. By age 26, the leaderboard has changed. Michael sits in first place with approximately $260,000 in net worth. Jake has grown to around $180,000. Ryan has fought his way back to roughly $120,000. At this point, many viewers would assume Michael wins the simulation, but the next phase changes everything.